Welcome back to the Dividend Diplomats YouTube channel. You've got Bert the Hurt, the man, the legend himself.
You've got Lanny the big dog over here.
Big dog. So you guys know what to do here. We cannot wait to talk to you about another dividend increase investment video here. The stocks that are set to pop and juice up that passive income stream for you this month.
Yeah, so if you want to keep watching us teach you about growing your dividend income and growing that passive income, smash that subscribe button. Give us a thumbs up. Turn that sucker blue. We are doing our best to continue bringing you YouTube channels, so please, every subscription and every thumbs up help as we continue to grow.
If you haven't seen from our last few videos, we are trying our best to get to 2,500 subscribers on the Dividend Diplomats YouTube channel. Why do we want to do that, Bert?
Because Lanny has made this commitment to all of you that he is going to do a full video in WWE impersonations once we cross that 2,500 subscription mark. So currently, we're just over 2,000. We're actually closing in on 2,100 by the time this video and the ones this week are going to release. So please, just help us spread the word of dividend investing, and let's see Lanny do his best Macho Man impersonation.
You know, or I might have to just tombstone Bert and say, rest in peace. But again, we're here to talk to you about a dividend stock video, and these are 6 stocks that are set to pop and raise their dividend this month of November 2020.
So why are we so focused on dividend increases all the time? We are dividend investors through and through. We've been dividend investors, Lanny for over a decade, me 8 years or so. It's incredible. What we've enjoyed is just building our passive income stream and watching it grow. The main way it grows is, one, obviously by putting money in. You're going to grow your passive income stream by investing more and getting more dividend. That's only one way your dividend income grows. You have dividend reinvestment, which gets you more fractional shares, which increases the dividend income you're going to receive on the next quarter.
Power of drip, baby.
Yeah, and then there's also this big third one, dividend increases, where companies, at least annually, hopefully for what we like to see, announce dividend increases to grow that income stream that you are paying. And what we've noticed is 2020 has been an insane year for dividend increases, and it's been crazier to monitor than ever in the past.
So what is a dividend increase? Again, this is when a company performs well, has sufficient cash flow and earnings to look at their current dividend, payment to shareholders and increase what that payout is. And typically, the companies don't really revert back. That's a dividend cut if they do. And that, again, continues to build your income stream and cash flow back to you. And that's the best part about dividend investing, is literally waking up and seeing an announcement such as AbbVie. I know this past week they increased their dividend 10%. That's a 10% raise on my income from them that I just received. Did you get your 10% raise this year at work?
I did not.
Oh.
At least not yet, maybe. But moot point. If you were receiving $100 from AbbVie going into this announcement, you're now going to receive $110 just by sleeping and waking up and seeing that announcement. That is what is so cool about dividend increases. And it's such an important thing to us that we build this into our dividend stock screener. And every time we find a stock, we look for companies that have this long-term history of increasing their dividend. The companies that have shown over time, through good times and bad, that they continue to increase their dividend. Because to us, we want this income to keep growing. We want it to be consistent. We want to plan on it because we're going to be financially free, and we're going to live off this dividend income and this passive income, and we need it to grow so we can keep up with inflation and the cost of living too.
Every dollar counts. If you've been to the blog, you've known my article for years now about every dollar counts. So every dividend increase matters, because every dollar that grows into a new dollar from that dividend increase is significantly important. So today, we're talking to you about 6 dividend stocks that are set to increase that dividend payout this month.
We always have fun texting each other, talking about all these dividend increases as soon as they're announced, as soon as we see them. So we decided to write this. We've been doing a monthly article for years now, and now we're bringing it to YouTube to bring our discussions out into the front, so you can see how we discuss, how we predict some of these dividend increases, and just have fun with it. That's really the ultimate goal of these dividend increases. We don't know what the answer is going to be. We're just telling you what companies we're watching, and then we're going to give you our projections.
Now, the articles are still being written by Bert each month, so you can always go to our blog with the link below in the description to go and read more about the details. But as Bert said, these dividend stocks, it's fun. It's fun to find the stocks that typically increase that dividend in any given month, on that given day, in that given week. So we always like to predict when, and then also how much do we think and expect that dividend payout to grow. And this month, again, is no different. We can't wait to dive into these 6 dividend stocks, Bert.
Yeah, I can't wait either, so I think it's time. Lanny, what do you think?
Let's do it.
Do it.
Do it.
Do it.
Do it.
Do it.
All right, Bert, let's get started here. What is the first dividend stock that you think is going to increase their dividend this month?
This one's personal for me. Yeah, I
Wow,
know, you're
it's
shocked.
personal.
This one is very personal because, give a quick backdrop. A few years ago, I think it might have been 5 years or so, I created an article, Bert's 5 stocks now to buy, now, always and forever. These were companies that I wanted to know that just paid a strong dividend, grew their dividend over time, and were just when the market got tough and I needed an investment, I had my list of 5 companies to go to. So this first stock is on that list.
And Bert can only count up to 5.
Yeah, I really struggle when I get to 6, to 8, to 10, to 12, 34. I don't know who my daughter's going to learn it from. Hopefully my wife. But anyway, this one is the 5th company on my always buy list. And from there, their dividend growth over the last few years has been abysmal, and it's pissed me off. And Lanny always makes fun of me for this company being on my
I
list.
invested in them too.
Yeah.
I was like, oh yeah, Bert had a pretty good analysis, so I bought shares in this stock, a long time ago as well. And every time that increase comes around, I look at him and I give him the.
Yeah, and that's where I'm just like, oh, let's talk about another stock. Let's ignore this one. So here's what I'm saying. This is my declaration right now. And we'll get to the company in a second. If this company's dividend increase is abysmal once again, I'm officially opening up the search committee, and we are finding a new 5th company to put on my 5 always buy list because I am getting a little aggravated with it.
All right, Bert, what is this dividend stock that we're talking about here?
It's Emerson Electric, ticker symbol EMR. I mean, yeah, they've increased their dividend for 63 consecutive years. They have a pretty solid year.
Dividend
Yield.
king?
Yes, they are, and they're one of the longest tenured dividend kings as well. They're beating out Johnson & Johnson, but anyway, it's not a contest. Both of them are great dividend stocks. But Emerson's 5-year average dividend growth rate is 1.3%, not even beating inflation. And last year, their dividend increase, they beat their average. It was 2% last year, which still isn't great. So yeah, that isn't great, and that's where I'm not expecting dividend growth to be strong this year for many companies. But if I'm gonna continue getting below 2% increases, I can find a better 5th company for my 5 always buy list.
Emerson with the current yield of around 3%, with the projected increase of somewhere in that 1 to 2% range, it may not be the biggest bang for your buck owning this and investing in this dividend stock. But yeah, again, that track record of just over 1% on a 5-year average, you could do better.
Yeah,
we can always do better. But Bert, all right, so based on the history, 5 years, 1.3. Last year, Emerson raised their dividend payout by 2% in 2019. So what do you think is happening in 2020?
All right, I'm going to go very low here. I'm calling people, getting the search committee ready. I think they're going to have a dividend increase between that's as high as 2% or as low as 0%. I think there's a chance that they may not increase their dividend this quarter. Or if it is, it could be 1%, it could be 2%. So I'm not feeling great about it. What about you, Lanny?
Speechless. So you think they may go a year, even though the overall payout will still be higher than last year, but have no increase?
Yeah, I think they could kick the can a quarter
Honestly,
or two.
I'm going to go real nuts here. They're going to raise it below 1%, but above 0%. I think they're going to do I think they pay out 50 cents a quarter.
Yeah.
They're going to go to 50 and a quarter cents a quarter.
Exactly. So basically what we're both saying here is we're expecting terrible dividend growth once again for Emerson.
But we've been surprised. Last year at 2% was a surprise, and we'll have to find out.
How sad is that? 2% was a surprise. We were pumped.
It was a surprise DX attack.
Okay, I'm done talking about Emerson. I thought about them enough right now. We're excited to see what this dividend increase is going to have. Lanny, who's number 2? I know this is a company you've loved talking about in the past.
Here's a funny question I have for you is, do you own this stock?
I do not.
Guess who does? This guy, baby. So, the second company is Hormel, ticker symbol HRL. Why Hormel? You love pepperoni. You love making your own pizza at home, throwing on some of that, hot pep right on top. No, but honestly, this dividend stock has paid and increased dividends for over 50 plus years, and they also wear the crown as a dividend king. And the best part about Hormel is the dividend growth. Some people don't buy and invest into Hormel stock because of the lower yield and the boring consumer goods nature. But boring is kind of what I like when it comes to investing. And I think Hormel is no different.
Yeah, speaking of boring, let's think back to earlier in 2020 when the pandemic kicked in. Everybody was stockpiling food. Everybody was buying a lot of groceries, a lot of food that can last for a while because nobody really knew what was going to happen. And that's where your strong consumer staples really flexed their muscle and showed why they are these dividend kings and these dividend aristocrats, and why they're still a very valuable piece for your investment portfolio. Because Hormel's products, like all the other companies, were getting scooped up by people to stockpile their pantries.
Now, Hormel, currently yields just over 1.9%, which is actually higher than the S&P 500 index.
Cha-ching.
Bada bing, baby. Now, their 5-year dividend growth average increase is over what, Bert?
It's over 13%.
Holler if you hear me. Over 13%. And last year was really no different.
No, it was just under 13. It was 11%, but still double-digit growth. So if you're going to have a low dividend yield paying company like Hormel, you want to see that strong double-digit dividend growth rate. That's exactly what we want to see from our lower yielding companies.
So what I really do think that they're going to increase their dividend at least 10% this year.
Yep, I'm right there with you.
I don't see anything wrong or different about that. So Hormel, all the shareholders out there, predicting again that dividend growth of in between 10 to 13% is what I think.
Yeah, I don't see any reason to vary from you.
So we're looking at maybe at least probably 2.25% increase, maybe as high as maybe 3 cents per share per quarter.
I think that sounds reasonable, and you'll get this announcement towards the end of the month, so we'll have some time to wait, stew on our predictions, and see if you agree with us.
Yeah, the last few years, Hormel has increased on the 25th, the 20th, the 19th of November, so really, look at that third week of November and early into that fourth week of November, so don't expect the increase now. Check out their investor news page. Hormel, again, more than likely, I'll say in between that 19th and 25th of November. Very exciting news.
Yeah, that is exciting news. It'll be fun to see what they come up with and see if they meet our strong projections for them.
So, Bert, we just talked about Hormel as the second dividend stock to increase. The third stock doesn't look to be much different than Hormel.
It does not. It also can be found in your pantry, in the grocery store. You're getting ready to make your Thanksgiving meals, your holiday meals.
In your pocket, you're kind of carrying it maybe in your cheeks.
Yeah, Lanny always has a little bit of oregano from McCormick that he just keeps around. Just rub it on here. Some aftershave.
Hey, use it.
Yeah. So the third company on our list is McCormick. And they are a major player in the spice industry. So chances are, I know growing up, I always saw McCormick spices in our pantry.
Ticker symbol is MKC, and that 5-year growth rate is similar to Hormel, maybe a little bit less, but the dividend growth rate on average is just a hair over 9%.
Yeah, which is fantastic, and they were very consistent with their dividend increase. Last year's was just under 9%. It was 8.8%. So. Look, the consistency is key, and that's what we love for these consumer staples. Hormel is consistent, and now we see at McCormick. I like this trend. We've talked about how Johnson & Johnson in the past is consistent. Procter & Gamble is pretty consistent. Consumer staples equals consistency with the dividend increase if the company's buzzing along, and that's what we like to see.
I'm projecting, they pay currently 62 cents per quarter. Mm-hmm. What do you think is going to happen?
I don't see any reason why it's not going to be between 8 to 10%. So I'm going to give a little range there. What do you think?
Well, given that they were at 57 cents, went to 62 with the 5 center, I'm going to call another 5 cent increase with McCormick, and they're going to go from 62 cents to 67 cents. And again, that's going to be towards that, really in that last week of November.
Yeah, so as you're seasoning your turkey, seasoning some of your potatoes here, you can be seasoning your dividend portfolio with a nice dividend increase from McCormick.
As you're seasoning up the band, you're tuning up the band for that sweet chin music to just clock Bert right there in the jugular. You got the McCormick dividend increase to really bring it home.
Yeah, what's that? We're getting the steel chair over here.
Oh. All right, so McCormick, towards the end of November, I'm specifically saying 5 cents. Bert's saying that 8 to 10% range, which gives it that, 5 to 7 cents.
Yep, I think that's perfect. Again, we're excited to see what McCormick gives us. Now, we're here for company number 4. We're halfway through our list. Let's round into the second half here. You've seen this company. I know you have when you're driving. So, Lanny, what company is this?
Yeah, you see them when you're driving. You may see them in, restaurant parking lots. You may see them in even grocery store type parking lots. It's interesting. You have seen this truck. It's the Sysco truck. And again, we're not talking about Bert's favorite thong song. His ringtone he still has on his 1999 cell phone.
Yeah, we're working on licensing to get them to be our YouTube intro video in the background.
Like dividends. No, I'm joking. I was about to.
Dividends.
Yeah, awful. But and we're not talking about Sysco Systems either. We're talking about Sysco with an SYSCO, and the ticker symbol for them is SYY. So again, you're talking about food service. Now, last year they had a big banger, Bert. What was their big dividend increase from Sysco?
It was over 15%. It was actually 15.4%. It surprised everybody based on some of their history because their 5-year average dividend growth rate is only around 8%. So you build in that 15% into the 8%, and yeah, their dividend increases before that were a lot lower.
Now, how do you think the Sysco is providing and servicing that industry right now? What is the current state?
I mean, thinking through it, if they deliver to a lot of large corporate cafeterias, they deliver to a lot of restaurants, we can't pretend that those industries haven't necessarily been hit hard by the pandemic, especially given people are working from home. They're not eating in these large buildings as much. They're not going out to restaurants. Sure, you're ordering takeout, but that's not the same as having full restaurants consistently running. So I could see, we've been pretty optimistic about the first 3. I could see a slightly lower dividend increase coming. How do you feel about the industry?
Yeah, I agree. I agree because, Sysco stock, and this stock in particular, and, when you think about investing into Sysco stock, it has been impacted, I would think. And I haven't really dove into too many of their earnings releases, but they have a good track record of dividend growth at 40 plus years. So they will increase their dividend, currently yielding over above average 3.25%, which beats their 5-year yield average. Plus, it's about 2 times the S&P 500. Do they come with an increase? Yes. Is it double digits? No. Do I think it might be? I think it might be 2%, 2 cent raise on the 45 cents. So I think we're looking at around a 5% dividend raise.
Yeah, I think that's pretty reasonable here, Lanny. I could see it being 1 cent, 2 cent, 3 cent, which would give it that 2.5 to 7.5% range here. So I'm thinking on the lower end, I think 5% is a very fair projection, but I could see that wider range, but it'll be lower than their average.
So stay tuned. November 13th, November 16th, in that date range. They usually increase it around that end of the second week, early on in that third week of November. Again, a dividend increase is great. If they increase it 5%, that is phenomenal. Your income is going to grow with that dividend increase, and that's the best part about dividend investing, that even if they're having a softer year, that these dividend payers and dividend growth oriented companies, they really don't want to lose that legacy and consistency of dividend growth, obviously because they need to reward shareholders. So Sysco, I don't think, is going to be any different.
Yep, I agree.
All right, so Bert, we finished 4 stocks. We've got 2 left. What is dividend stock number 5 that is set to increase that dividend?
Yeah, the 5th company on our list is ADP, ticker symbol ADP. I love it. I love when a company's ticker symbol just reflects perfectly and fits right in.
It's kind of like 3M. The ticker symbol is 3M's.
Yeah, Johnson and Johnson, ticker symbol JNJ.
Dividend Diplomats, ticker symbol DD.
We're working on getting this with Dow DuPont and seeing if we can take that from them.
Actually, it's just DuPont.
Oh, it's just DuPont now?
Yeah.
Well, how? Maybe their thing's a sham if it's just only one D now. Maybe the two double D is available. We'll contact our lawyers here shortly. But what I like about ADP is we talk about how Sysco was a company that could have been potentially impacted by the pandemic. ADP, payroll processor, regardless of whether you're working from home, regardless of whether you're working in the office, you need to process your payroll. And they have other services too. That doesn't stop. So a company like ADP is set to perform consistently and perform well in line with history in a pandemic type situation like this.
Actually, with the CARES Act and all of this economic stimulus, and Brett, I don't know if you know this, but there's a lot of behind the scenes with payroll tax credits. And if there was a premier provider to help service and work with those companies, it's ADP. Because with FICA, aka your Social Security Medicare tax that was being deferred, with retention workplace credits for the small business owners if they retain employees, there was a bunch of federal tax credits. ADP, if anything, was probably either being consulted on if they weren't the current payroll processor for companies, or their services were going up to help consult those current companies. So again, I think ADP is having a great year. And in fact, they were able to reduce costs by retaining employees. So their profitability, I would assume, is going to be strong going, starting now and going forward.
Yeah, that's a fantastic point. Tax situations are getting much more complex with people working everywhere versus in one single location.
Now, ADP had a boom of an increase in 2019, Bert.
Yes, they did.
What was that growth rate, if you recall?
Yeah, they increased their dividend from 79 cents in 2019 to 91 cents. That's their quarterly dividend in there. It's a massive dividend increase.
Yeah, that dividend increase in 2019 was well over 15%. And in fact, that 5-year average is double-digit growth rate as well, similar to that Hormel, getting close to that McCormick.
Yeah.
ADP is no different.
Yeah, so again, we said it with McCormick, we said it with Hormel. We don't see a reason why their dividend increase wouldn't be similar and wouldn't be in line. I feel the exact same way about ADP. I'm not going to say it's going to be 15% again. That's ambitious and that's fantastic. But I could see a 10 to 12% dividend increase once again. I'm very big this month on giving the ranges.
So I'm going to say they're going to round it out. Given that they pay 91 cents per quarter, they're going to round it out to that dollar.
Oh.
$1 per quarter for you shareholders is my take, and that's going to be a hot 10% take.
Man, they're playing the prices right, because that would be fantastic if they land on that dollar spot.
I'll tell you what, we need a game show for guess that dividend increase.
I mean, we can get the big wheel, spin the wheel, and see where it lands.
Jim Cramer, call us. We'll have some fun. We'll be on Mad Money. It'll be a nice little 5-minute segment.
I love it. Guess the dividend increase. People can call in, say the ticker symbol, and Laney and I can in 20 seconds.
And then whoever loses gets to do a WWE finisher like the Stone Cold Stunner or Rock Bottom.
I love it. Instead of that buy button, we'll have the increase button.
That's right. Now, given that Bert thinks it's going to be another banger, I think it's going to be a solid 9-cent, 10% increase. This may be coming sooner than later. It could be coming this first week of November.
Yeah. Wow, yeah, that's going to be quick, so we'll know fast. And it'll be nice because all the other ones are weighted towards the end of the month.
Yeah. All right, Bert, let's bring it home. We've gone through 5 dividend stocks. We've got your Emerson, Hormel, McCormick, Sysco, ADP. What is the 6th dividend stock set to increase that dividend? I know the viewers are waiting.
Yeah, this one's going to be a fun one. It's not a dividend aristocrat yet, but it's a very popular, a very well-known company headquartered out of Oregon.
Oof. You may be wearing them on your feet, on your back. You may be, wearing it outside when you're running.
Yeah, you don't know. I'm sure a lot of people are. They have sponsorships of your Michael Jordans, your LeBron James, all the great athletes out there.
Just a kid from Akron.
Yeah.
Not even supposed to be here right now.
Yeah, man. I mean, come on. Who is it, Laney? Are we talking New Balance? No, I'm kidding. We're talking Nike here.
Nike, just do it, baby.
Ticker symbol NKE. we are rounding out our list with the athletic apparel giant.
Now, and from your perspective, Bert, how has Nike performed, do you think, this year?
This is going to be such a mixed bag here. Their major markets have been severely impacted by the pandemic, but like so many of the other things, people are still purchasing apparel. You still need to buy those new clothes, and maybe people are still working out at home. They're still taking on different exercises, so they need those Nike athletic shoes as well. I guess it might not be as great as it was before, but it hasn't fallen off a cliff. I don't feel the same way about them as I do Sysco.
I feel like Nike's done fairly well. I believe that there's like that secondary market that treats the Nike shoes as art. I feel like, people are still working out and, partaking in, different sporting activities. In addition, something about Nike, it's shoes. You need shoes. And I feel like if people weren't able to spend money elsewhere during the pandemic, they could still buy shoes.
Yeah.
And I had a few, friends and colleagues that still said they couldn't buy the newest pair of Nikes simply because the Nikes were out of stock at their favorite retailers.
Yeah, so that's what's so fascinating about Nike. Is it a supply chain problem from the shutdown of the pandemic, or is it demand driven where they have so many people trying to buy these shoes? And the answer could be a combination of each too.
So Bert, what was Nike's recent 5-year dividend growth rate?
Yep, they're another high dividend growth one. Their 5-year average was 13%. Last year they announced a very solid dividend increase, well, with 11.4%.
Well, and you need that dividend growth because Nike is one of those low yield, high dividend growth rate stocks. Nike's yield is actually below 1%, and they're just above that high yield savings account rate of 0.6%. They yield just over 80 basis points or 0.8%. So given that Nike has that low yield, they need to almost balance that out with high dividend growth.
Yeah, and Nike is set to deliver here. So again, this is going to be such a confusing one for the projections because it is that mixed bag. So since I'm not feeling quite as optimistic as Lanny on this one, I'm going to say Nike's dividend increase is just going to be between 8 and 10%. Still very strong dividend growth, but it's going to be lower than the last year in their 5-year average.
Yeah, I'm going to call it 10% increase. I'm going to say they're at 24.5 cents per quarter, and they're going to deliver a nice little notch to get it 27 cents, a 2.5 cent increase at 10%. Hopefully, it doesn't get lower than that because of the dividend growth. But we'll find out more than likely in that end of second week, early third week of November.
Yeah, this is fantastic, Lanny. So everyone, thank you very much for hanging with us in here while we announce these 6 dividend increases. Remember, dividend increases are an important part of dividend investing, and we live for them. And hopefully you've enjoyed our commentary and seeing us talk about these dividend increases. You're really seeing how him and I talk about this and analyze these companies. So let us know what you think of these 6 companies. Let us know how many you own in the comment section below. We'd love to hear your thoughts and what you're projecting for them as well.
Yeah, we definitely would love to hear what you think. Yeah, your projections and really comparing it to what Bert thinks, what I think. Again, even him and I differ on a lot of viewpoints on the dividend growth rate, but that's what makes dividend investing and conversing about dividend investing makes it that much more fun. Again, if you haven't yet, please like the video. Give us a nice subscription. Click it. Subscribe. Get that notification as well when we come out with videos. This is Bert and Laney from the Dividend Diplomats. Over and out.